Panel members here, and this panel would predominantly be on are your audit procedures good enough to evaluate the risks in today's technology world? And our moderator for this particular session is Mr. Mandar Navsekar, uh, who's a senior manager at Deloitte and a CISA professional. Mandar has 15 years of auditing experience. He has worked on various statutory audit, internal audit, and IT audit engagements across the globe. Mandar works with Deloitte and leads a team of 100 IT audit professionals. Over to you, Mandar. I will let you introduce your panel members.
Thank you, Suketa. Good afternoon, everybody. Very warm welcome after a great dinner, or lunch, sorry. Today for our panel, we have eminent people from all walks of life, from industry as well as consulting. Before I hand it over to them for the introduction and starting the discussion, just would like to set some context as to what we will be covering briefly today. So as we were discussing some time back about the privacy, the current scenario of technology has changed drastically the way we do the business. On one hand, people who are separated by different continents, they are able to talk and see each other on real-time basis. We can do our business and transfer money like this, which gives us a lot of opportunity to expand our business and do a lot of work as such. On the other hand, what is happening is when we wear a hat of CXO or various stakeholders, nobody is very sure as to what kind of different risk this technology is leading to. The whole scenario is getting so much complex due to emerging technologies like mobile computing, cloud computing, web-based applications, and all the governing bodies and regulatory bodies, they are also gearing up to tackle this risk with various compliance requirements, various frameworks are coming on. And in this new landscape, which is kind of a great combination of various opportunities as well as new risk, where does our audit profession stand? Is it good enough to use our old traditional way to look at the risk and give assurance to our clients, or we need to come up with some different way or different approach for auditing, obviously keeping our principles intact? So that is the kind of discussion topic for today. So I'll let all my panel members introduce themselves and give their thoughts on it. Prashant, would you like to start?
Hi all. Myself is Prashant Gupta. I'm a technology senior manager with the Technology Risk Services with Deloitte, based here in Gurgaon. And professionally, I'm a chartered accountant, and I have spent a long time in IT controls and GRC services. And I have worked in overseas in US market for around like 9 years. And here in India, my focus area has been governance, risk and compliance, ERP, security and controls, and how basically we should transform technology in the shared services environment, which is again bringing more, you can say, a convergence to the different sectors, whether it's telecom, whether it's banking and financial services, or we are talking into infrastructure.
Okay. Raghavendra.
Yep. My name is Raghavendra. Can you hear me? Shortly called as RR. I am the senior director in Oracle Financial Services. As a banker for 17 years and then moved to the IT in the last 14 years. I had the risk management group. I think risk management is perceived in different ways in different groups. Just to give an overview, the global risk management in Oracle, it talks about having controls at the proposal level, contract level, execution level, and post-implementation level. So we look into a project or a proposal from starting from the beginning till its end, and give a perspective to the management how we behaved or how we executed project from contractual obligation, risk and exposure, financials, and making the customer as a referential site. So I am part of ISACA in the task force, and also working with John earlier in the professional standards committee, setting up the standards. Thank you.
Thank you, John.
Hi, good afternoon, everyone. My name is John Ho. Professionally, I work in Ernst & Young as a partner in the IT risk and assurance practice. Started my career as a financial auditor. spent 6 months in Nepal, Kathmandu in 1990s. So those were exciting times. Moved on into technology audit, and since then, my area and industry that I serve in ranges from financial services clients to insurance, manufacturing listed companies. A lot of the time in these is either supporting it from an external audit perspective or in the advisory capacity of co-sourcing internal audit or re-engineering the internal audit methodology.
Hi, I'm Sundar Krishnan. Able to hear me?
Yeah, it's working.
I'm Chief Risk Officer of Reliance Life Insurance Company. I also have an oversight over legal compliance, secretarial, audit and claims, more from oversight perspective. And I'm part of the ISACA Global Task Force, which is India Task Force. And I receive a lot of internal audits, and we actually have a co-source model, so a recipient of internal audits, I would say. And so I would give you probably an industry flavor or perspective of where I stand. And that's all. I mean, I report to the board and the top management. So.
Thank you. Warm welcome to the entire panel. So before getting into this topic, we are discussing that there is various facets and dimensions by which we can look at this particular topic. One of these is definitely emerging technology, which interests all of us. So John, would you like to talk something about emerging technology and how it is affecting the entire landscape?
This is what happens when you're not from India. But no, emerging technologies, let's take a step back. What does it mean? If you're looking at it from an internal audit perspective, I think many of our clients that I see have yet to really add it to the agenda in that respect. I think like all things, the technology will come first, the risk consideration will be chasing behind. So whether it be social media, whether it be bring your own device, a lot of it starts from a cost perspective most times. Same with the value proposition of outsourcing BPO. I just had a client last week where we had a discussion. They have just outsourced the entire IT to a service provider, moved the entire data center out of Singapore into a neighboring country. All the employees under the IT division were moved along with that. For the first 6 months, great reviews. They are now in the second year, and there's been a lot of complaints. I asked the CIO, who still has his job with a client, and I said, do you think it is because there is a people change? And he says that might be the case because in the first 6 months, it was the same people serving the organization for many years, moved to that location, doing the knowledge transfer, and 6 months, the knowledge is supposedly transferred. Sorry. Was it on the internal audit radar? No, it wasn't. Whose responsibility is it then? Another organization, manufacturing, as well as retail, they started a MYOD initiative in Singapore. They started having a lot of people bring devices in, etc. In the first quarter, they had 2 email outages. Why the 2 email outages was simply because they didn't factor in the load of all the MYOD devices coming on. The good news is that the MYOD outage as a result of that one lasted about close to 8 hours, right? But I will tell you that I have another client, listed company, have an ITDR, SAP system. They had an email outage that lasted for 1 week. The ITDR didn't quite provision that email will go out. It went all the way to the board. Was email ever audited? No. I don't blame them because this is being an engineering firm. The internal audit competency is somewhat, not at that focus as far as technology is concerned. But clearly, it shows the vulnerabilities of an organization, the risks that it is surrounded with. A lot of the time, touch wood, perhaps it hasn't happened. Back to the theme of today's topic, are the audit procedures good enough? My personal opinion, I think for where it is focused, the audit procedures cannot give absolute assurance, but obviously in line with experienced people following the audit guidelines and framework, yes it is. But the emerging technologies is an area which unless people make time to invest, provision, give the bandwidth in terms of the people who are responsible for doing the audit and risk assessment, it is very, very difficult to have a clear answer that, we are doing enough. And the last point I would say is that a new school of thought has come up, and that is whether, and again this is from an internal audit perspective, that perhaps there needs to be two kinds of competencies in an internal audit division. People who are responsible for compliance, the day-to-day tick and check marks, and another group of people who are very risk focused. And they are the one who's able to dynamically assess the risk and says where the focus should be, but yet not ignoring the checklist compliance stuff that you got to do periodically, such as procurement. You can't run away from that. Singapore, if you keep track of it, has quite a number of procurement incidents. And in Singapore, the government recently had a national issue because an agency went out and did a bid for bicycles. And there was one bid. And that bid went to a reseller that was selling Brompton bicycles. And if you know what Brompton bicycles are, they are 2,000 Singapore dollars a piece. So why would a government agency civil servant be riding on a $2,000 bicycle, whereas the policeman who's trying to catch thief is riding on a $50 bicycle? No right or wrong, but it shows that if you talk about risk, it's a very broad term and we need to be very careful because management tends to ask very simple questions expecting a yes or no. And we need time to be able to help them understand the dimension, just like the session before lunch, around privacy and thus hiring a chief privacy officer answers the questions.
Right. I think that's a couple of points which are noticed, and that's where actually the industry is also focused, that should internal audit continue doing the checklist based approach, and one hand people say no, we don't want to do it, just outsource that, and I want to look at ERM and GRC and some high-end stuff, and other people are saying that no, we want to have that, and in addition to that we want to have some specialized people who can be risk focused. And what we have seen often with our clients, that if you want to focus on various risks which is coming out of emerging technology, the internal audit folks in the company, they should also be well equipped, they should also be knowing about new concepts, and they should be having cutting edge knowledge. So Sundar, since you are in charge of internal audit in one of the great conglomerates of India, how do you cope up with this challenge?
I think a very valid question, and I can't less agree with John. I think only thing that I do is pray to God or touch wood many times. So it's a challenge actually. In fact, to give you the model that we adopt, we actually co-sourced internal audit. I'm not exactly in charge of internal audit. The head of internal audit reports to me.
Okay, sorry.
So, but we have even then the co-sourced model where the internal audit firm, a specialist internal audit firm which doesn't do statutory audits, which doesn't do taxation, which doesn't do consulting, only internal audit across India, and 75 odd listed top companies. So they again come to audit committee directly. Plus we have a risk specialist team that directly reports to me, which is what John was referring to. And then we have also co-sourced continuous monitoring to independent, which is the kind of intelligent checklist, key controls check that you do quarterly. Right. And then we do our compliance teams, and separate compliance reviews again get co-sourced. So compliance review co-sourced. We also co-source risk reviews sometimes, again for expertise reasons. And internal audit, mind you, is not co-sourced for cost or reasons like that. It is co-sourced for independence actually. So we have internal audit by the group, by the investors. So you have internal audit which is co-sourced, we have risk review, we have compliance review, continuous monitoring. So you should feel that I should be very happy, and no, I don't. So I still have a problem. I still have to pray to God many times and I don't get time for that. Right. So it's that kind of world that we live in, and we're really challenged. Big data is a challenge, voice bringing your devices is a challenge. We have Blackberries that people bring in, we have iPads that people bring in. Now we've stopped iPads. We struggle with Android, we're working on that. So there is research, and then we have added to this is the challenge on cost rationalization, so-called cost cutting or cost rationalization. We're trying to move things to cloud. Have regulatory challenges, customer data, not a piece of customer data should go to the cloud. So I have to constantly ensure that it doesn't go. So in all this mess, or rather in this contagion, as we call it, where do I stand? It's continuous exercise. You have to really be up on your toes to constantly monitor things, check things, and hope nothing should blow out. And even if it, you have to do very quick incidents response, or a disaster recovery, or troubleshooting exercise.
Right.
So that's what is risk management all about. You can't avoid risks, and especially in this emerging world and technology. So going back to your question, audit procedures, are they going to be adequate? They're not going to be adequate. Let's accept that. But if you carve out good audits for the co-source partners, if you're very clear with what is your scope in, scope out, you get a specialist or experienced auditor, as John pointed out, I think they would deliver results. We've seen that many times. So am I happy with the auditors fraternity? Yes, I do. I'm happy. But are you sure that are the procedures adequate? The answer is no. And it is risky. So it's a very funny oxymoron or whatever. So
Right.
that's how it is. That's what is reality. You challenge, and we have 1,000 servers, heterogeneous operating system, databases, big data, and then of course add to that is the email. I've got something like 10 or 15 key systems. I've got everything under the sun, SAP, Documentum, SOA, service-oriented architecture, middleware, thin client, thick client, name the technology, it will be there in the sphere. So that adds to the largesse of the problem. But when it comes to, again, information management or a data structuring issue, it's still a challenge. You don't get data, or you get multiple data. Right. You don't get, because it's all not a very orchestrated strategic layout of applications that happens in the practical world. Also, how good the company might be. Mind you, we had a Gartner-driven strategy right at the inception of our company. Still, the applications do not come in very logically, or they are bought, they are acquired, and then you find out there's so many challenges to deal with. So also a planned, also a good your company might be. You have committees, you have think tanks, you strategists, you outsource to specialists. You still would have issues if you are a big company. You still have complex issues to resolve, and you have lots of challenges on the regulatory front, privacy front,
Right.
and security issues. So coming back, what was your question?
No, the question is like, how the internal audits in Indian industry is gearing up to tackle with this new cutting edge technology. How are they equipped?
Then I'll give you example of our own internal auditors, the so-called specialist firm. I think they're quite good. One thing that we did amidst questions from audit committees was we didn't remove them after 3 years. We got the audit partner though changed for independence reasons again, or familiarity reasons. The team is very specialized now because it took us a challenge to train them in insurance. The domain knowledge is something which is an issue in audit fraternity. Nowadays, of course, most audit firms get the domain specialist also. So if you have an insurance auditor, you must understand insurance inside out. So that took us time, 1 year, 2 years. And then now they are up the curve, and we've imposed things like KPIs like usage of tools, audit CACS, ACL. They should directly work on core systems and things like that, and which they do. And so they have coming up the challenge. There are of course challenges of staffing, costing, time hours. We do spend a lot of time with them bargaining things, arguing out things, and finally arriving at a good consensus. And it's working out very well.
Right.
So that's how it is. But going back to your panel question, are the adequate procedures good enough? Probably not. That's a big issue.
And Sundar, I also noticed that during your inputs, you also mentioned that continuous monitoring is gaining a lot of importance. Traditionally, we all know that auditing used to be a post-facto event, that a person, like Hindi movie, we have very typical Hindi movies, and all Hindi movies have one scene that when the entire show gets over, when the entire fight is get over, then the police run and then they say, oh, okay, I'm here, now let me arrest the, whoever the bad guy is. So traditionally, internal audit a few years back used to look upon like one who comes after the fraud is done, one who comes after things have went wrong, and then now this person will come and suggest some kind of changes in the procedures. But now, as you mentioned, Sundar, the entire focus is changing, and now people want internal audit to be more proactive, more strategic, more risk-based. So, Prashant, when you approach various clients, how do you kind of fulfill the needs of clients to have proactive and continuous monitoring?
So it's a good question, Mandar, and let me take a step back here and just touching upon what John has said and what basically Sundar has said. And there are basically I would like to take probably a moment to say I was in US when that kind of turmoil happened in 2007, 2008. And what I have seen is on the Wall Street or the other companies who are like Fortune 500 companies, although they have a lot of procedures in place and all big fours are doing auditing for them, but issues were still existing, and I will say in today's time also you will find organizations that issues are still existing. But basically it's not only you can say reliance about the technology and the tools, it's all about the concept, all about the approach and what we are trying to mitigate. How is our objective defined? Like for example, if we say that organization has a vision, where in this vision they say that my vision is only do a risk preservation. You don't get into shareholders creation, or you don't talk about like a value creation. So you have very limited agenda. And that is what is a big challenge. If you see in today's time when we talk about risk management, even risk assessment, most of the companies and in different part of the world, what they say is like, I want to live with this risk or I don't want to live with this risk. So this needs to be clear at the tone at the top level, that how they want to align their risk assessment, risk management with the overall vision of the organization. Because the same risk can give you an opportunity to create a wealth. I will give you a simple example saying that an organization wants to get into acquisitions, or they want to do a cross-border transaction. So they are looking towards increasing their gross profit, looking towards increasing their shareholders' value. And same time, when there is a fraud in the organization, they trying to preserve the shareholders' wealth with right procedures and practices. So that's very, very clear. The demarcation is there, whether you are talking what is the objective of the risk management. And if it is just a paper-based exercise, it's a tick in the box. It never really help you getting the final objective. So over a period of time, if you see in last few years where the paradigm shift has happened, and it is no more a transaction-based audit, it is more a conceptual audit. People build their audit approach and they build their frameworks following framework across the globe like COSO, COVID, and then say, okay, I will have entity level controls, I will have process level controls, I will have say for example transactional controls which I will test. In nutshell, what they try to do, they try to mitigate their risk at each and every level. But are they doing 100% mitigation? No. Answer is no. Only what you can do, you can get a reasonable assurance by identifying some right procedures, right concept, and trying to mitigate that risk. Now, in today's time, if you see, there are various tools available in the market. One of them, I will say, as a concept is a GRC, which is Governance, Risk and Compliance, which has various products with it like Oracle, SAP, Archer, Open Pages, and whatnot. You can find almost 15 to 20 products in the market. So that's where the convergence is happening. That's where the audit is moving towards more efficiency, cost effectiveness, and getting a better reliance with less procedures, or you are trying to do more automation towards those procedures. So I will say still the convergence needs to happen, still the maturity needs to come, and in next, I will say 2 to 3 years, Indian market is gonna definitely see a kind of a big maturity curve, which will will help them converging with basically the western part of the world also, and get them to a next level audit framework. Apart from that, one point I would like to highlight, one of my colleagues have already mentioned about it. If you're talking in Indian market, outsource environment is very, very prominent. You talk about companies, very big companies, whether they are into telcos, whether they are into like say manufacturing businesses, they are kind of outsourcing their core information technology to big companies, to big IT vendors, and they are even outsourcing their core network to big network service providers. So how basically we should start looking in those areas to still mitigate risk. It should not be the case that we outsource the operation and we say that risk resides with the IT vendor. No, the risk still stays with the organization, and time to time we have to put effective measures and controls and do very effective monitoring across the period to see whether those controls are effective and we are able to mitigate those risks or not. So because still like as the evolution will keep happening, the efficiencies will come, but risk management also will play a very, very key role in the outsource environment.
Great points. I think I noted a couple of things you're talking, Prashant. One is you said risk as opportunity, and this is interesting because traditionally we have been looking at risk as some kind of negative thing which will lead to some loss to my asset or property. But you said risk as opportunity. It can be a term as risk as missed opportunity. So when you look at risk as missed opportunity, do you think internal audit should look at this? Should they change their procedures to cover that aspect as well?
Sure. I would like to go in a little different way. So let us take the example of a banking environment. It is like an online transaction happens, and it is to be available 24/7 across the globe. Like city never sleeps. That is their tagline. Means Citibank. It works throughout the world, and it never sleeps. So if you take from a risk perspective when you are implementing a product in a banking environment, and it's going to be like you call it as enterprise service bus, means you are going to integrate in a particular bank all the interfaces with, it could be a SWIFT, it could be with RTGS, it could be with any payment systems, and you have to abide by the law of the land. Means you have to abide by laws of in various, let us say 160 countries, 180 countries where it is running. So the risk management group focus, it is as it could be an internal audit is separate, which talks from a product development perspective or from a customization perspective. Whereas the risk management groups looks from a holistic approach, which we call it as 360-degree approach. That is what we implement in Oracle. Means as a product company, we are looking like three things. One is, what are the contractual risks if you are going to do a business? Means if I am doing a particular thing we are implementing something in Pakistan or in Iran, what are the risks we perceive from there? The second one is, what could be the technology risk if you are implementing? Like for example, a data cannot flow from country to country. For example, in Switzerland, the data cannot transfer. How do you really transfer the data? So how much data you can transfer in a masked way or in a encrypted way? Or if you are having different payment gateways or payment systems, like for example in Japan, if you hear one of the bank, everything is totally a mobile banking. Means there is no virtual, there is no branch to support the users. More than 5 million customers, they do all transactions using mobile banking. So in that case, what should be our risk and how do we see that we support that? Okay. The main thing will be like integration and interfaces. From a technology perspective, there could be 100 or 120 online interfaces. There could be so many offline batch processing systems. So how do you really look into integration, the performance of the system if you are developing something and giving it, and you also come out from a like intellectual property rights, what you are discussing, whether the rights it belongs to us or it belongs to somebody else. So if you are doing a customization of any product, peripherals, if you are doing a customization, who is it to be IP rights tomorrow? Okay, that is one thing which we look into. And also the other two aspects is the confidentiality of information. How do we keep it? I think every one of you know there is something called as an onboarding process when you really send your guys to the sites. Okay. Audit group thinks, yes, we have sent the people, there are some mobility issues like you get work permits or something. But today, if you see in many banks, there are some 30 to 25 forms are signed by the resources. And some of these forms what you sign, there could be some privacy related things are there. Like for example, if one of the customer asks you to sign on, am I having H1, N1 or some virus attacks or something, you have to go for a drug test.
Yeah.
Every person may not be interested to go for a drug test and give the results. So we have to look like, from our contractual perspective, look what are the onboarding risks are there, and do you agree for all those things. So today the challenge for the audit group is, or the risk management group is, we need to know the functionality, we need to have the technology,